And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, traders. Welcome to the Coach's Playbook for Tuesday, April 26, 2022. I'm joined by Dan, Hogue, and Mick, per usual, generally. And today we're talking about, maybe not the most fun thing in the world, but let's say you have your strategy and it's not working. What do you do next? I think we have a lot of thoughts about this, but first, Mick, do you have a shout out today for us?
I do. Big shout out to Sanam Ukyab, up $3,600 trading the NASDAQ right now.
Great job there. So let me preface this discussion a little bit, is that if you listen to some of our previous episodes where we've talked about building a strategy, the great thing about keeping consistent like that is that you get good data as far as testing. If you're just shooting from your hip, kind of doing whatever feels right, and it's not working, there's not really anything we can do to help you because we're not sure what is the consistent part that's not working. However, if you do have a strategy that you're following pretty religiously and it's no longer paying out the way you want it to, or you're losing money, then you know something's not right anymore, and it's time to diagnose that. Mm-hmm. So for starts, I will throw this over to Dan. Dan, what do you do when your strategy is not working?
Well, there's a couple things you got to keep in mind, right? What's the market state? Am I being consistent? Jack, you bring that up. I think that's the key here. The only way to adjust is if you're consistent in your approach, you're consistent in your routine, you're consistent in every aspect of your trading. Once you can prove, hey, I've been consistent, the next thing you got to do is start looking at market state. Has this market state changed? I think right now you're seeing a lot of people having to make these adjustments because what has the stock market done the last 10 years? It's crept higher. We've had our down moves where everyone, people take a little bit of hit that they're working on these long strategies. But lately we've seen a lot of down days. We've seen a lot of sideways trading. We're not seeing these continuous buy the open, sell the close, and probability states you're going to make some money. That's kind of out the window these days. And so you do have to adjust. So that's the next thing you got to ask. Am I seeing changes in market state? If we're starting to see changes in market state, then that's when you can start to open things up. To me, if you're struggling with market state change, you can always do the old adage of just flip your computer screen upside down and say, hey, let's start looking at it from the same approach. So you have options like that, but really it has to be the key to change in your strategy has to be incremental, small little bits, small little pieces. If you're making huge changes, you're never going to know what's working and what's not working. You don't want to, jump around, dance with a bunch of different strategies and hope one of them is going to work because you don't know exactly. You're not creating any real information from that. If you can start to look at things and actually start to make small changes. So what I like to do when this market state changes, I fall back into a very simple thing. You guys probably, I think Hogue calls them Danels. I fall into my channels. All right. That's really what I have to do. If I got to make some adjustments, I got to find my channels. I go back to my bread and butter. For me and my trading, that's my bread and butter. Channel definition, finding where I can look for the shorts, look for the longs. And that's really what I like to do. So that would be my big recommendation. Find that consistent, that piece of your strategy that works and adjust it to that market state. So like I said, if it's a channel, right? If we're trending higher, you got a channel like this, we're working low to high, you're buying the bottoms, you're selling the tops, and you're working your way there. Once that market starts to shift into a downtrend, same exact thing. Start to define that channel for yourself. You're selling those tops, buying those bottoms. And that's how I adjust for myself. Small little tweaks. That's where I start to learn. And then we can start to find, hey, you know what? This is where I've actually really been struggling in this strategy. It's not so much the direction, but hey, downtrend. volume works a little bit differently, right? If we're continuing to see that volume come in strong, we know the down moves happen a little faster, right? We take those elevator downstairs up. We get to start to recognize those things. So maybe it's that quicker approach, no less hesitation to take that short, or in return, you know what, I'm going to just look for those small wins on the long side. So those are some things you can start to think about.
Dan, I think you hit on definitely the most common way that strategies stop working, which is a change in market state, right? If you've been running a strategy that relies heavily on buying weakness, over the past couple of years, you've been doing quite well. And in the new year, you've probably been doing less than well. So that's probably the biggest thing to step back. The same thing applies often to things like volatility. You know, back, it's hard to imagine those days before Corona when we'd have the VIX somewhere in a 12 or something like that handle. That's a different trade than when the VIX is in the 20s or 30s, et cetera. So you have to pay attention to those and look at those as inputs in your strategy. I also really like the idea of changing one thing at a time. You know, first thing to do when your strategy isn't working is you size down. The same way you would size up if it's working, you size down and you try to change one thing at a time until you get back on track. Pogue, what about you? What do you have to say here?
Well, you guys are pretty much covering most of what I would suggest to anybody that was, you know, suffering from longer term drawdown such as this. First thing, size down. Of course, you know, you're still going to have to operate. You just want to lose less if you're going to continue to do things the same way and hope that the market changes to you instead of you changing to the market. A lot of it is in the context of the market. You know, it's what is the market attempting to do and how good of a job is it doing in going in that direction. You know, the suggestion of changing little things instead of making sweeping changes is also, you know, is also a good idea. Or just kind of going right back to the basics, you know, okay, you know, I'm using this lens, simplify, size down, small changes in the tweaks that you're making. And, you know, I'm seeing it a lot in, you know, what Dan was saying. For the last 10 years, the market's been going up. This year, it's kind of in a downward trend, and a lot of people have a hard time changing that. It's all in pattern recognition. You know, going from buying weakness to selling strength. It takes an adjustment in your brain to be able to make that change, and recognizing it, you know, in a simple way, and making that gentle tweak to your strategy is, you know, is how you get your way out of it.
Yeah. And you can only run a good experiment if you're changing one variable at a time. I think another important thing, and I'll throw over to Mick, and hopefully don't cover every thing you want to say here, but think long and hard about why your strategy isn't working. What is happening? Are you going into a level and it's just blowing right through you and hitting your stop right away and then working out? Is it just hanging around too long and not getting to that profit target that you have set? All that's information that you could use to improve your strategy from there. That was just one aside before. Mick, what about you? I know that you've had your great highs and great lows. What do you do?
So I agree with everything that's been said thus far, and yes, you guys left me with very little here, being the third one trailing along. But you know, what determines if your strategy is not working is your P&L, and depending on what your strategy is or what kind of trader you are, you need to first frame out, you know, what kind of P&L would be telling you that your strategy is not working. So if you're someone who's, you know, trading on a higher time frame and you hold things for days, weeks, maybe even months, you might need to look at your quarterly statistics to tell you whether or not your strategy is not working. Now, you obviously have the the indication from being in any open positions that are not winning to let you know that things aren't working. But, if you're on a higher time frame, you need to look at, a monthly P&L or a quarterly P&L to assess if your strategy is not working. I know most of the people we're talking to today are day traders. As a day trader, you get 5 days a week to be trading. At the end of those 5 days, the goal is to have more money in your account than you did the prior week. So, if you find yourself, again, 5 trading days, if you find yourself stringing together 3 losing days during that week, you only have so many opportunities and, on those other 2 days to actually make that week profitable. So for day traders, I think, 3 losing days in a row should be a little bit of an eye opener. When you get that eye opener, like it's been mentioned, you absolutely want to scale back. When things are working, that's when you put your foot down on the gas pedal. When they're not working, it's when you pump the brakes. So if you're trading 5 lots, you might want to scale down to, 3 lots or 2 lots. You don't take additional leverage when things aren't working. You take additional leverage when it's working and when you're hot. So I think you should look at how many days you have losing in a row. If you're trading 1 lots, scale back from 1 contract to micros or something. Always scale back first. You also, if you're going to keep going, if you have 3 losing days during the week and you want to scale back and trade those next couple days, fine. But if you find yourself down that week, a losing week, or down 4 or 5 days out of 5 days, you'll really want to stop and stop trading. If you're not taking any risk, you're not going to be risking losing any money. You might miss some opportunities, but again, the odds haven't been on your side. You're on a little bit of a cold streak. So you can't lose money by not taking risk. And sometimes some of the best trades we take are the ones that we don't take. And when you're losing, those are going to be your best trades. So you can always stop, step back. There's, over a couple hundred sessions during any given year. So there's going to be opportunities, but don't add any insult to injury if things aren't going well. So stop, assess, make small adjustments. And I had mentioned by Danny and Hogue, these small adjustments are important. Everybody who's new to trading, you have to find your strategy out. You're going to try new things. You're going to lose here. You're going to lose there. You're going to be a little inconsistent when you're trying to find your groove. Once you do find your groove, you want to practice consistency, because consistency is the one thing that will exploit your weaknesses as well as your edge in the market. So when it's not working, go back to what your strategy is and make small tweaks. You don't want to go changing everything and rewriting your playbook or your strategy. Small stuff will help you get there. And as you're making small tweaks, you want to continue trading small. Market environments are always changing. A strategy that could make you a lot of money 1 month or 1 year might not work the following month, the following year. So you need to adapt. And I think that's one of the most exciting things about these markets. It's not day in, day out the same thing. We get thrown curveballs all the time. Let me see my notes here. I think, everything I had to say has been said by John and Hogue and Jack. But, it's always good to step away and reflect. And if, everybody who's traded has gone through periods of time where their strategy hasn't worked. Losing money in a business where you're wanting to make money is no fun. So not only, when you find yourself, when your strategy is not working, are you losing money? That stinks. But over time, it can really affect you emotionally. And, it can be depressing getting out of bed and going to the computer. So if you can stop, you'll help yourself mentally as well as financially. And I think the mental portion of it's, so big. Trading's challenging. It should be fun. But if you're miserable going to the computer every day after a drawdown, take some time off and, work things out mentally, plan for a strategy change, and then come back at it. Because I think we all know you need to have confidence when you're trading. And you just need to be having fun too. Not every day is going to be fun. Not every trade is going to be fun, but this should be fun. It's a wonderful business. It's a tough one too.
Yeah. And I'll add one appendix here. What we've covered so far is for retail traders, which is most of our audience, people using Top Step. 95% of what we've discussed is applicable. My appendix would be maybe for if there are professional traders out there, and I'm sure who have experienced this, there's also something that can happen. I see with the people that try and scalp here too, there is such thing as having a strategy that evaporates for reasons outside of your control or the market state, i.e., you have an edge that gets edged out. Like no edge lasts forever. And that, for example, that happens a lot more with spread trades and stuff like that. There used to be all sorts of amazingly lucrative trades involving the ultra bond future against the 30-year that was just printing money. Everything was great. Implied spreads off of employment numbers, things that were too good to be true. And nothing in trading is too good to be true for very long. Things catch up and your edge gets taken out. And that's when you have to go back to the drawing board sometimes. And I think this applies to retail traders too. If you change enough things and it's not working, well, maybe it's time to kind of go back to square one. You have a lot of knowledge from before and start formulating a new strategy that's going to work in this market. And that's what everyone that lasts a long time has to do here. I see Dan with a finger up. So
yeah, I have one thing I really want to add, in this conversation. And I think it's important, especially from the day trading side of things. One bad week does not mean run. 2 bad weeks does not mean run, right? Don't just jump ship right away. Create that expectation. When you get into trading, understand that there are going to be bad weeks, potentially a bad month. And it doesn't mean that strategy is not good. Give it a little time. All these guys hit that same point of size down, slow it down a little bit. If it's not working, it doesn't mean you got to jump ship right away. It may take a couple weeks to get back into a rhythm, right? Because there's a lot more that can be affected or can affect our strategy. It can just be our mental makeup. It can be our exhaustion. We may have a heavy plate and we think we're executing everything the exact same way, but because we're psychologically just in a different place, it can affect things. So don't jump ship because you had a bad week or you had bad 2 weeks. I'm not going to jump ship if I had a bad month. I think most everyone out there, by the time you get to this, you've spent at least a couple of years. Every trader I talk to, I feel like I've been at this for 2-3 years, or I've, worked my strategy from Forex and the stocks and futures. Like you've kind of worked through some things. You've put a lot of effort into that strategy. So don't leave it the first week. It gives you a hard time.
Yeah, no strategy is going to work 100% of the time. There may be nothing wrong with your strategy if you just had like a bad week. If you see consistently diminishing returns or consistent losses, then you might have the problem. So believe in yourself, but believe in yourself that you have the ability to change as well. So Dan, you got to, Mick, go ahead.
Really quickly, as we're wrapping things up, and I heard you say not every strategy works every time. I'm going to jump ahead of Danny's quote and provide a quote that popped into my mind. And I think by the
save it till the end, Mick. You can save it till the end. We'll kick the quote to you.
Okay. All right. Sounds good.
Well, unless anyone has anything to add here.
One thing?
Yeah.
Just because your strategy isn't working, don't think that it's a major thing. It could be a very simple thing. Start with the easiest thing to look at. It might be as simple as just turning your hat backwards.
Ooh.
I don't even have one on today, Hogue.
Bad to the bone, Hogue, down there.
We did have an interesting comment that came in that I do want to touch on. I think it's a good comment. Spencer just says, with the risk limit in the combine, you can't really weather more than 2 bad weeks without going bust. Spencer, I will argue against that. Every account in the combine has a practice account. If you're struggling, shift over to the practice account. Don't waste the combine on it. Get yourself back in that rhythm before you get back in the combine. That's what I have to say to you on that one.
Yeah. Also, say you have like, I don't know, a $3 grand drawdown or whatever in the combine with the rules, just hypothetically. I mean, you can have, like we talked about in the podcast a few weeks ago, Dan, like your stop for any given trade could be pretty low. It could get, because you do have the ability to trade, some micros and things like that. So I think it's difficult, but I think you can
There's
definitely do
ways.
it.
And I get that, I get that thought process, right? You look at it and say, well, if I'm on 150K, my drawdown's $4,500. That can go pretty quickly. I get it. $450 losing day, 10 days straight can definitely lead to that. But there are ways, and that's how you want to approach any trading account. Maybe you got a $20,000 futures account and you say, well, if I'm losing $500 a day, I got 40 days of trading. I'm going to not lose for 40 straight days. It's the same approach. You just want to think of outside the box of how can I get myself back on track without risking capital?
Yeah, I would trade it like I had as I said, I would trade it like as a $4,500 account of my own money, right? I mean, you don't want to go down to zero there. So would you trade that in such a way that you would lose all your money in 2 weeks? Maybe, but that would probably be a sign of less than ideal risk management.
Exactly.
All right. Well, Mick, I guess you have the quote.
Stole the quote. I guess Danny must have really liked it. So the quote I have today is from Brian Fantana of Anchorman when referring to a cologne scent. He said 60% of the time it works every time. So I thought, to put back into the context of when I thought about it, trading strategies don't always work. So, they've done studies that say 60% of the time your strategy works every time.
Love
Better
it.
than my quote from Confucius.
Pepper a little comedy in today.
Okay, right on there. Well, you've all been informed in some way now. So, Ho, you want to send us out?
Sure.
Being the Confucius of Top Step and all.
Of course. Yeah, this is hard. There's gonna be good periods when things seem to be going really well. There's gonna be periods when things don't go so well. It's those that weather the hard times that end up getting to the winner circle, if you will. Sometimes it seems like we're grabbing for the roses and all we get are the thorns. If you keep going at it, you'll get to the roses. So don't give up. Be diligent in your efforts. Continue to learn and grow. And we want to see you succeeding. So let's get there.
Hey, that's all for this week. We'll see you next Tuesday with a brand new topic and some more quotes from Anchorman. Talk to you later.